Hi, everybody. Thanks for joining me today. With the release of the IPCC Intergovernmental Panel on Climate Change report, saying that incorporating a plant based diet is a great way to mitigate climate change, I thought it would be wonderful to talk about climate change and how we mitigate it, how we do draw down on climate change on today's VegTech Invest Upside and Impact webinar at EATV, the world's only plant based innovation and climate ETF. We have been focusing on emissions avoidance. So, we're going to talk about that today, how avoiding creating the emissions, meaning you don't have to buy carbon credits because you're just not making the emissions to begin with. This concept of emissions avoidance can be a useful tool for climate mitigation. It's what we focus on in our ETV ETF. Indeed, we are carbon neutral without buying credits due to that emissions avoidance. This means that when one looks at the global potential warming temperature of ETV, you'll see a potential warming temperature of 1.18 degrees Celsius. This would be compared to standard investment, the S&P 500 index, which has a global warming temperature potential of 3.2 degrees Celsius. So you see this power of plant-based innovation in emissions avoidance and how that can be a very strong tool for one's investment portfolio to potentially reduce carbon impact. Who best to talk about this with than Ian Monroe, the president and CIO, Chief Investment Officer of Etho Capital. They have their own ETF, ticker Etho. Today we're talking about his newest initiative, the Climate Positive Initiative, in which we can all start to move from net zero to actually climate positive. A big part of that is based on emissions avoidance. Let's get into it.
So part of what we're doing with the Alliance as well, first, we need to be setting more rigorous targets for where portfolios actually need to decarbonize, how we need to get the pollution out that's aligned with, again, what the science says is necessary. And then we need to be doing the complete climate math to show that we're actually doing that we're actually removing pollution from our investments and shifting our individual investments and overall portfolios to net climate positive. And this is a big piece of what Etho has always done with the investment funds that we help create, as well as analysis that we've done for investors of various sizes, including some of the largest investors in the world, is this full, what's called scope 1, 2, and 3 climate accounting, where we look at the full pollution connected to every company we consider investing in, including not just what's going on at a company's facilities in terms of their operations and electricity use, which are called scope 1 and 2 emissions, but also really importantly, including what's going on with the company's supply chain, as well as the climate pollution connected to the products and services that a company puts out into the world. And that's typically termed scope 3 emissions. And a part of that downstream scope 3 emissions can be what are called avoided emissions for climate solution technologies. So for example, for plant-based foods, there's substantial avoided emissions relative to the meat and dairy products that those foods are replacing. And of course, there's also avoided emissions for renewable energy relative to the business as usual grid intensity of electricity that includes fossil fuel pollution. And same goes for electric vehicles, et cetera. So to ensure that individual investments are net climate positive, you really have to do this full scope 1, 2, and 3 climate math that includes avoided emissions calculations for climate solution technology companies. And if you're not doing that, you're not getting the full picture, and you're not really seeing if you actually are investing in solutions and how big a piece those solutions are of decarbonizing a whole portfolio, getting all the pollution out, even to the point where there's net climate benefit, where your portfolio is net climate positive. So a big piece of what the Climate Positive Investing Alliance is doing for investors of all sizes is helping create standards for doing these calculations, and then actually we'll be creating free tools and data sets that investors can use to do these full calculations and ensure that their individual investments and overall portfolios are shifting to net climate positive. And we get into some more details about just overall climate positive scope 1 through 3 climate impact calculations on the Etho Capital website. The link right there, ethocapital.com/climate-positive-investing. and happy with any of your listeners to reconnect after the talk and geek out about the details of this. But suffice to say, it's really essential that we're doing the climate math to show that we actually are achieving the goals that we're setting for ourselves. So that's a big piece of what the Climate Positive Investing Alliance is doing as well.
So this resonates with me so deeply because at VegTech Invest, we've been really working on that climate math. And I empathize with the audience when they say, oh my God, ESG, greenwashing, climate zero, climate neutral. I'm lost. And then indictments, I'm just lost in the news cycle about what's going on in the world and what makes sense to me. I just want to highlight what Ian has said here because it is so critical. This is where we really focused our climate math with VegTech Invest. And again, you can look at the work we do there if you're interested in investing for change. But that emissions avoidance is really key to the math if you are to have the most impact possible. And that's where the shift comes, right? One was focusing their attention on, let's say, an investment that had a large emission output. And if you shift to something that has less emissions, you are avoiding emissions, and that's getting you to climate positive. I also want to underscore here, it's where we focus a lot of attention for our shareholder engagement work. Getting the data for emissions on scopes 1, 2, and 3 is part of the climate math. Very hard to do the math if you don't have the numbers. So really encouraging those companies up and down the supply chain to disclose their emissions, and that scope 3, that way up the supply chain, being so critical. If you're interested in shareholder engagement, please reach out to me. We have a lot of campaigns really encouraging companies to show that data. It makes such a difference for us.